All right. Well, this will be the final lecture, other than the cleanup, or not the cleanup, but the final exam prep. So we'll do some cleanup on this thing just to capture some other items and just kind of provide maybe a little summary and maybe a little update on current events right now. People, whatever, if you watch the media, it's like I say, it's driven by narratives and the rest of it. And not to get, again, overly political, but when people say that, the sky is falling, the stock market, things are so good, and now everything's just going to crap. Well, number one, they're not. I'm actually making a fair amount of money because I've jumped in and jumped out a couple times doing some speculative moves. But obviously in the long run, too, if you're invested in the market, things are going way up. So a little blip here or there isn't going to be the end of the world. But the reason I put up this chart is this chart sort of shows the real problem that show that some, fundamental change is needed in the situation. What you have here is you have the stock market. The S&P is an indicator of the stock market. So the Standard & Poor's 500, an indice of that. And what you have down here, let's look at a range. Let's say the S&P money invested in that, let's say it was down at about $1,000. So down around 2011. If you put $1,000 in the S&P down, in 2011, the value, the money you would make on that is way the hell up there. So this is the number over here, up to about, not quite $6,000, but, we're talking about almost 6 times as much money. Pretty good, 600% increase. Look at wages. Have wages done anything? You wonder why, you used to have the situation where one person, out of a married couple, generic married couple, one person would go off to work, yet they had a house and a car, and they weren't, then it became the norm for 2 people to work, and then it became 2 people to work and struggle a little bit, and now it became 2 people to work and they're whatever. The wheels are coming off the bus. So if you want to do the Wall Street versus Main Street type thing, this chart sort of shows what's going on. And even when manufacturing, the situation, especially with artificial intelligence coming online, there's going to be even fewer jobs. Perhaps there'll be higher paying jobs, building machines, doing things like that. But the actual jobs like that are going to be minimized. So the other thing about this is just to single out maybe a low-wage country, and specifically in the news. I don't have anything against the Chinese, but that is the topic that keeps coming up. The Chinese advantage has been cheaper labor for a lot of those tasks. Well, all that goes out to the window, when you're using automation to do that production. If you're making shoes and they're being made by hand, the country that can do that at a lower wage is going to have an economic advantage, and that's where things are going to flow. But if they're being made by a machine, the labor component is almost trivial. And so anyway this situation goes, as AI comes on, things are going to be more difficult in the labor sense. But they're going to be less difficult if you're the one actually doing the manufacturing. And perhaps, now that we don't need the actual person doing the manual labor, the person writing the code, the person taking care of the machines, there's going to be fewer of them, but they're going to be paid a normal wage, and it would take advantage of maybe some of the skill sets that other countries, other than just low wages, can offer. So interesting things, but and again, I think I made my point that the markets are going to go up, going to go down. If you're listening to people like, say, back in 2008, the media was all the markets, it's sell everything, and you got out at the bottom, you gave it all up. I mean, you were so far ahead up here, and you let it dwindle down, and then there was another blurb, and here you decided to get out. All you had to do was just not panic and ride the wave on up, and within whatever, let's say this peak over here was 2005, here 2014. Anyway, you're whole again. Now, if you didn't do anything, you're fine. You'll make it through. Now, if you decided to retire, if you're 70 years old, and you may not make it across this trough, and you're having to sell all kinds of stuff. But if you're a younger person who's still accumulating, this is just noise. The analogy I would use is that this whole thing is like a roller coaster. Figuring out the stock market, trying to guess. Market timing is what we're talking about, when to get in, when to get out. The best of the people out there, given all the algorithms, given everything, nobody's figured that out because there's too many dimensions. And you can write an algorithm, but when something is based on fundamentally human behavior, there's not going to be, we don't act as rationally as a machine would. And that's what the buyers and the sellers, they set the prices and they derive. And so you can do what you want with the system, but as long as there's that human component and that unpredictability, it's not going to happen. But I mean, I'm just a simple caveman investor here, and I've done kind of all right, and there's people who've done way better than me, and all they've done is they learn how to kind of ride the roller coaster. I'm not a genius, but you put me on a roller coaster, and you know how it does that tick 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 thing as you're going up to the highest point, and all of a sudden it gets like eerily quiet, and then the ride starts. Well, when you hear that eerily quiet noise, when you know you're at an all-time high, because don't expect the media, the Kramers of the world, we can talk all about that. There's a guy named Jim Cramer, Inverse Cramer, how those guys are, there's actually funds that are established to do the opposite of what some of those pundits say to do. So anyway, I'm not trying to get off track here, but those people are not necessarily going to be the ones to help you out. But when things start to get quiet, you're making money, everybody seems to be happy. If you are going to be selling, that might be the time to basically, sell. Get off the ride at that point. Now, once the ride starts and it starts descending, now you're on for a ride. But you are hopefully, or at least with the most of your money, you're an investor. You're not trying to guess every little up and down on this roller coaster. No, you just want the big, positive, no-brainer kind of moments. So you do that you heard that tick, tick, tick thing, and that's the time to sell. The other time, the time to buy, that would be at the all-time low. How do you know at the all-time low? Well, obviously, based upon what I'm telling you, that's some of the times when the media is the most noisy. If you're on a roller coaster, when do you hear the most communication? When you're at the all-time bottom of the ride, before you even get started. If you do just consecutive roller coaster rides, every time you come around, those knuckleheads in the little place are going to be telling you to keep your arms and legs inside. They're talking to you. They're telling you. They're giving you all sorts of advice. So they're semi-helpful at indicating the bottom, because, man, that is newsworthy stuff. All those commentators, all those pundits want to tell you about that. So if you can pick the highs and the lows, or just stay on the roller coaster, and unlike a physical roller coaster, a stock market roller coaster, it ends up at a higher place eventually. But this fundamental problem with the wages being flat, with basically Main Street getting screwed, with people getting $15 an hour and think they're knocking it out of the park, when their compatriots on Wall Street, or their investors, and I hate to label it, the boomers with all their 401ks, they're squealing right now because they don't like this unpredictability. But my God, they're the ones who brought us this system, so they got to live with it. And if they've got to suffer with some volatility to get the wages up, and anyway, we'll see what happens. But again, don't listen to people who say they've lost money. Conversely, you should actually, if you've got the wherewithal, there are people making money in a situation like this. Volatility. They don't really care which way it's going as long as it's moving. They're on the other side of the trade. Now, I'm not saying to put your life savings. That is complete speculation. But regular investing will do you fine. So, next, we're going to look at some of the other investments. So, precious metals, gold, silver, collectibles, speculative stocks, cryptocurrencies, real estate. So, you got to outdo inflation. The reason I don't have your savings account up here is because that's just basically a sucking chest wound. You're treading water, but you're not keeping up. You're taking on water, and it's just not going to end well for you. Gold versus the stock market. So this is a current chart. This even has 2025. Where do you want to be? What is the faster horse here? Gold, maybe you don't like the ups and downs. Yeah, there was probably more volatility, arguably. But who ended up ahead? Again, we started with pick a figure at some point. Say it's the year 2000. This is the .com bubble, so that's why things went down a little bit here. But so anyway, let's say you both started out. This guy, you started out with zero way back when, but now this guy's at around 40 grand in 2000, and you're chugging around 10, and then things go, and then this is really where you start to see this divergence. Gold staying flat, and other things are soaring. And so when this comes down a little bit, it's been a good run. I'm all about greed, but this is getting a little ridiculous when people are anyway, most of the money's actually coming back into the market, and so it's made some good swings. I'm not selling, at least on the speculative stuff, until I'm up 25%. I'm only up, 12 and a half or so right now, so it's got a few more weeks, hopefully, to go up or down. And but that's just short-term stuff. That's not, actually investing stuff. That's speculation. Historical gold prices versus other things. Again, here's a bunch of items on here. Now, this stops in 2017. And, this one's actually got some key stocks in there. So going down the chart on the right, you got Bitcoin, Facebook, Amazon, Netflix, Google, which is now Amazon, bonds. Okay, we've got a few dogs around here, but we're trying to get them under control. I think it's better just to press ahead at this point. Bonds, gold, dollar, and Standard & Poor's 500, the stocks. So, I showed you the S&P, which seemed, wow, that was impressive. Yeah, well, now who's got the fastest horse? The Bitcoin people? That's a lot of speculation. I'll give you that one. But Facebook, Amazon, you could have certainly done well. I'm not saying to put all your portfolio in it, but, these guys went on. Alphabet is now Google. So anyway, they went on to become the Magnificent Seven. Bonds, never a fan of bonds. I haven't been. I'm not saying you shouldn't be. But they are certainly a popular item, but not popular with me. I've got nothing, against them personally, but look where the dots go. Below gold. Not where I want to be. Okay. How do we also get into some of these problems? Yeah, the money supply. This goes back to our COVID problem, which kind of led up to all this. And then post-COVID, they just kept pumping money in. So things were on shaky ground, but I think we're going to be all right. One of the things that gives me confidence is there's one of the people I think you should pay attention to is a guy named Besant. Not because of, his politics or whatever, but this guy has done this stuff before. If you ever hear of George Soros, who is, extremely one of the most leftist guys. But anyway, Besant was associated with Soros back in the trading days. And the reason why you know the name Soros is because he made a killing primarily on one trade. Basically, it was they crushed the British pound. They caught the British government basically on the wrong side of a trade, and they made billions, and it almost put the UK into default. And anyway, Besant, that's where he learned to trade and was a fundamental part of that trade back with George Soros. So again, all over the political spectrum, but what do they have in common? Competency to know how to work financial markets. Okay, other types of investments. So again, gold, not a bad thing. The problem I would get with gold is, well, we'll talk more about it, but we're looking at all collectibles right now. If you're going to do collectibles like, say, art, rugs, things like that, I've kind of been down this road, but all the collectibles that I had access to were all throughout the Middle East. And, man, it's a crazy game in terms of, how do you sell these things and how do you make sure they're even real? While I was in Afghanistan, I bought a number of stones, emeralds and things like that, and most of them are just glass. I didn't pay a whole lot for them. Obviously, you get what you paid for, but you think you're getting a bargain, but no, you're just getting even. you really got ripped off. The other thing about them is that market, the liquidity. Who do you sell these things to? And when somebody says, these emeralds, this carpet, this whatever is worth an exceedingly high amount of money, do you have that buyer? Do you have to put it in some auction with a huge commission? Do you have to? Are you, whatever? I know collectible cars a bit, and I just know that the market varies drastically, kind of inverse to the stock market. When the stock market's flush, the collectibles go up. But when people are broke or feel like they're threatened, the value of those things can plummet. And then you also have to, store them, secure them. You can damage their value quite easily. It's not like, something that's held digitally like a Bitcoin or something. Speculative stocks. We've talked about pump and dump. We've talked about how it predominates in the penny stocks down in the ones that aren't regulated by the SEC. But that's so tempting. And it's fun. Don't get me wrong. I've invested more junk money. I never big money, but yeah. Synergy Pictures and NPEC. And I mean, there's, PCSV was educational. I mean, insider tips and, yeah, garbage everyone. They all ended up at zero. Fair enough. I thought we were going to make a killing, and I enjoyed it, but yeah, not where you wanted to be. Futures and options, they can't be predictable. They add predictability to the commodities market for the corporations. They have a purpose, but if you're just blindly out there messing around, especially in the futures market where you have an obligation to deliver with an option, the reason why it's called an option, you have the option but not the responsibility to deliver. So anyway, think very hard before you get involved in those, and maybe go with a small amount of money, and I mean limit your losses to a small amount of money, which pretty much eliminates futures, because futures, you can, things just get geometric very, very quickly. Alrighty. Bitcoin, the new gold. I think I've made enough. I think I've let slip that, I'm pretty bullish on Bitcoin, and to say anything too positive about it, I think would probably be a bit irresponsible on my part. Especially at this point, the market is kind of high. You don't want to be, FOMO is a thing, fear of missing out, where people jump in at the last minute. I mean, I will make a lot of money on Bitcoin, and how am I going to do that? By selling it to some poor sap who is going to probably ride this thing up and down. It'll probably go back up, in the 4-year cycle like it does. But that person who buys it is going to have about 4 years of pain when they realize that they got in at the all-time high, which is exact opposite of what I'm trying to do, get out at the all-time high. There's only going to be one person walking away from the table who's going to be happy on that transaction. But the power of Bitcoin, the power of, and I mean more of a broadly to battle, some of the government currency manipulation. Don't be, I'm not saying everything that's happening right now is intentional, but when the federal government owes about, I think it's 38 trillion in debt, they need to refinance that debt on a periodic basis. And the way it was structured, because of last year being an election year, a lot of short-term financing. So if the interest rates drop, I'm not saying we go into a recession, but if interest rates drop, if the Fed and everybody has to drop interest rates to stimulate the market because of a correction, the federal government is going to be in much better shape financially. So a weakening dollar, some of these other things that you go, oh, that's bad. Bad for some people. And if you and I were to try to manipulate the currency to do something like that, that would be insider trading. But basically, when you're the government, when you are the cop, and you're doing it yourself, yeah, there's no, what do they call that, internal something? Nah, there's no insider trading. It's just, and they're, hopefully they're doing God's work. They're saving the U.S. government money when interest rates go down. But there's a lot of moving parts out there. Okay, potentially change the financial world. Yeah, smart contracts, all the other different things done on the blockchain. Way too much to go into. Be very careful, though, who you get your information for regarding crypto. Be very careful, that you don't become a sucker, because all those pump and dump things are, this is where it's going to happen right now, because this is where the money is. And, yeah, be careful. All right. Yep, these are those cycles. I mean, you don't have to be a rocket scientist to go, wow, this one looks a lot like that cycle, and this cycle looks like that cycle, and I wonder if this cycle is going to look, yeah, so this cycle seems like it's going to be stretched out. The cycle actually happened last April, so we're about a year out from the halving. So theoretically, going with the old models, the halving has to do with the rewards to the miners. But anyway, if the cycles were absolutely carbon copies, which they're not, you would want to sell, like, say, next October. But now they're saying it may be in the next year. But again, not financial information, but, worth what you paid for it. Real estate. So real estate is, the way I use real estate is because I do a lot of crazy stuff. And this is not atypical. Some people are just into real estate fully. But for me, I'm able to sometimes make some quick money in the stock market. But, those opportunities come along and things only happen once in a while. And to provide some stability and also to provide a nice place to live, real estate is not a bad thing. So tangible asset, it's not going to go away. The whole magic bean thing with Bitcoin, that it could just disappear someday. Probably not, now that the institution's in it. But real estate, that's absolutely not happening. And there's no, inflationary aspect to it. In terms of, you can't, if gold prices go up, for example, miners go out and find more gold and more is added to the supply. The value of the dollar decreases because they print more money. Bitcoin obviously is limited. It's 21 million coins at the end when it's all done. But so there's a, anti-inflationary mechanism by design. And real estate even more so. There's only so much land in the world, and so you're good. And then the potential to enhance your life. So, big proponent of real estate. It is tax advantaged as well, and you can use borrowed money for it. So even though the rate of return may not be as high, if you're using borrowed money, if you're using, say $10,000 to control $100,000. Your rate of return can actually be quite reasonable based upon your leverage. So we'll talk more about real estate as we go along. Another way to do it, and you're talking about, well, all this investment talk is cool, but I don't have any money, or I don't see how, doing my day job, I'm good at it, but how am I really going to get ahead? And I've never had, I don't know the last time I didn't have at least one or two other businesses going alongside my day job. At one point, I got to a certain point in my life where I literally had two full-time jobs and a small business on the side. Now, yeah, that probably, well, I don't know. I had quite a bit of fun, but it was a specific situation, post-divorce, daughters in college. I didn't want them to be affected by the whole thing, and so I don't mind working. And so, but anyway, all that, the small business was what kind of set me up, because it does give you a way to get ahead, in the potential. Like I've said, if you're working for somebody else, they're not going to quite pay you what you're worth. They'll pay you almost, just a little bit less. But if they pay you more than you're worth, then it's just counterintuitive. No, that's how a business works. They're making money from you. This isn't a private company. Government companies or government entities, that's a different thing. But those jobs, I think, are going to be a little bit more limited in the future. So anyway, if you're going to have some sort of side hustle type thing going, or you're already maybe involved in one, I just want to review a few details, because I think it's appropriate, because I think for most people you might find it not only a source of income, but also a little bit more fulfilling. And that's primarily why I got into small business, just because, being in the military or working for a big faceless, soul-crushing corporation, it just wasn't very fulfilling. You never felt like you were getting anything accomplished. You were just whatever. I think as a human, you're set up to achieve things, and so it was, you could actually see tangible results when you had your own business. So anyway, the easiest way to set up a business is sole proprietor. Now, that is absolutely the worst thing to do, though, in just about all cases. So what are there? There's a lot of sole proprietors, at least in the small businesses, just because they're super easy to set up. But it's just not a good, if we take away anything from tonight, don't set up a sole proprietorship. Do some LLC. Do something like that, as some sort of corporation, maybe a partnership. But even so, I'd still go with a corporation. So in a sole proprietorship, let's say you want to be a painter, and you put Bob's Painting on the side of your truck, and you get a business license, and you just start knocking it out. You've got just one person, and all of your income's going to go across your taxes and all of your liability. So you're driving down the freeway and one of your ladders flies off. You get sued, and they can take your house. They can take everything. I mean, you've worked really hard for all this time, and then somebody's hurt or killed. I mean, they're no less hurt or killed, but now you're losing everything. And yeah, so I've run with a lot of different lawyers as friends, and used them, and man, some of the stories you hear are just, they're horrific. And if that person would not have been a sole proprietorship, if they would have been some form of a corporation, their corporation would have been sued, not them personally. So yeah, if you're found negligent and you cause this whole thing, they can take your truck and they can take all the business assets, but they can't take your savings. They can't take your home. Now they can pierce that veil of corporate protection, or whatever they call it. There's a legal term for it, meaning that, yeah, this is so egregious, you were so negligent that, yeah, we're pushing that aside and we're taking everything you got. But in a typical, setting, legal setting, you don't have that exposure. The other thing is that, let's say you pass away. The day you died, so did that company. So your plan was to, give it to your child or sell it to somebody else, or all that's going to be a lot more difficult because it's tied directly to your name. And so the tax implications, the transfer implications, everything's just kind of harder. So A partnership, a couple people, and then a corporation. We'll talk more about it as a corporation as I go. And then an S corp. I used to have an S corp. It was stupid. I wasn't big enough to do that. It had to do with pass through, and I had this sophisticated tax lady, and she was not. The IRS and subsequent people have told me, you shouldn't have done that. So, but it can be a thing if you're in a certain situation. LLC, a limited liability company. This is probably the most powerful form of organization. And this is what I've had, I don't know, a number of these I've started. Not hard to do. Unlimited number of shareholders, so one or a bunch. Taxed as a partnership. Yeah, so not a lot of tax benefits on there. It just means it's going to be taxed typically as income. And then, but that use, avoid personal lawsuits, which is huge. That limited liability. That's one of the primary reasons to do it. But also, like for succession, you can bring in your children as shareholders, and you can do all sorts of creative things. If you have, I actually have a James Parker LLC, right? And if I happen to die, I'm dead. But yeah, James Parker LLC is still an entity. It's still out there. It's a registered corporation in Alaska. So all of my assets are under there, and it's just going to be the smoothest way to pass things like that along. And it can, it has personhood, that corporation. It can be, oh boy. We're on our final lecture. We've had good dogs so far, but they're kind of losing it tonight. Okay, sole proprietorship. So one last thing, just a quick review. Yep. 3/4 of the U.S. corporations. That's not a good thing. That represents a lot of risk. Yeah. Everybody's less likely to get credit because it's not an enduring entity. It's just a one-off. Here is the breakdown. So these C corporations, this would be like Apple, Google, everything you've ever heard of, all the big corporations. Yeah, in numbers, very, very small. In assets, huge. And then all the partnerships, about 23%. But this is just kind of a travesty. This means a lot of people just it's not that hard to do. You go online, you go to the Department of Commerce, website, or you can incorporate in a different state. Everybody always used to incorporate in Delaware. Delaware's kind of given up some of their corporate, friendliness type things. In fact, they went up, not to make this about Elon Musk again, but they went after him because he was going to get some huge payout. I don't know how many billions and billions of dollars it was going to be. And they prevented that from happening. A big victory for the citizens. Except it also would have been the largest income tax check ever written to the U.S. Treasury that, the Treasury was denied. So it all just went into Tesla stock and went back to the shareholders. Anyway, who won on that one? Advantages of sole proprietorships. Yep. Minimal regulations, tax at individual rates, but everything goes through you, If you're running a big operation, a big farm, oh, you're a millionaire. Well, no, I'm not. I've just got this farm. Well, all your assets and all this income passing through, puts you in a crazy tax rate, and everything about it is just not typically good. Unlimited liability, that's the worst. External funding, it's kind of fragile. One person having to do it all. Success tied to the owner. Higher taxation rate. So partnership, couple people, but it doesn't have too many advantages over a sole proprietorship. It's just a couple people. But again, these are two people I don't know. Sounds like a marriage to me. Yeah. Corporations, assets and liabilities, separate from the owners, right? So that's where that the ladder fell off. They can take the truck, but they can't take your house. Own and transfer property, enter into contract, sue and be sued in court. And yeah, they're the big entity. Anybody with any business wherewithal is going to be some form of corporation, to include an LLC. They have stocks and dividends so they can raise money easier, And this doesn't have to be publicly traded stock. It can be, a small corporation. Dividends, so they can do all that. The, mechanisms for raising money. That's why most people, or a lot of people, will form a corporation is to generate capital. Anyway. Easy to do. They're making it sound like this is, it's just a drop-down menu, $250 in 10 minutes. I did not want to form a C corporation, which is like a bigger corporation that's going to be selling stock, but I happened to hit the wrong thing on the drop-down menu, and that was a few $100 mistake because I had to redo it the next year as an LLC to make it more what I wanted. But so kind of a fail on my part just from not reading the instructions on the site, but very easy. You don't need a lawyer. You don't need any of that kind of stuff. Just knock it out. Types of corporation: domestic corporation, foreign corporation. A bit beyond the scope of what we're talking about here. But alien, foreign, domestic, it's done by the state. So if you, are doing a Delaware corporation in Alaska, you're a foreign corporation. Big whoop. Unless there's advantages. Delaware used to be a very business-friendly state, not very consumer-friendly. Now other states have tried to take that over. Private corporation. So, I really like some of the stuff that SpaceX is doing. Well, nope, it's a privately held corporation. DJI, the Chinese drone maker, really good product. No, private corporation, not traded on. I don't even believe it's traded on the Chinese markets. I think it's just privately held. When a private corporation decides to go public, they do what they call an IPO. So sometimes it's a great time to do it. Sometimes not. Anyway, depends. Not a lot is fair here. There is some preference maybe given to the big people, and I've never, whatever. Sometimes there's some interesting public offerings, but it's very hard to get in on the first sales. You're usually already buying in the secondary market, maybe within a few hours on the first day. So, and then public corporations. Anyone can buy, sell. These are up on the exchanges. And then some quasi-public corporations. So, there's some things that have a dual role within the government, and but you're not necessarily in it to make money. A nonprofit. I actually started a nonprofit at one point. I ran into some problems with the IRS. I was trying to raise pigs for charity and and they, whatever. It was basically too good of an idea, and the IRS was just too complex. I was going to have to get lawyers, and it's like, oh, wait a minute. I thought I was doing this to. I don't have that kind of time, and I was about $1,000 into it when finally I said, I'm not feeling so charitable anymore. But if you want to go to work for a nonprofit, oh my God, don't be confused. Nonprofit corporations, those are some of the best paying jobs out there. Steady work, especially up here in Alaska, So LLCs, limited liability. Best characteristics, so very, very popular. Banded together, so they're kind of designed that way. You'll see a lot of big companies even, formed as an LLC. I'm sorry, I'm jumping down to cooperatives, but anyway, best characteristics: corporations, partnerships, and sole proprietorship. So, other than my one mistake, that's all I've ever formed are limited liability companies. All right. So I wanted to touch on that. So we talked about some different investments, collectibles, things like that. Just, very difficult. You have storage aspects. You have other things about it. We've talked about stocks. I think we've, spent a fair amount of time on that, and maybe you'll desire to go that way. I mean, like I say, some people are drawn to it. For me, it's kind of like, because I'm not a huge sports guy, and the watching the stock market is kind of like that to me. I mean, when somebody knows a bunch of useless sports trivia, I'm always thinking about how could you monetize that? How could you potentially make some money from that? If you had that kind of knowledge about the stock market, you could be a pretty wealthy man. Plus, the other thing with the stock market that's kind of cool is, let's say you're some New York baseball fan, and you're a diehard Mets fan, and all of a sudden the Yankees are winning, which they do. You're like, guess what? I'm a Yankees fan now. Your friends would disown you. You'd be whatever. In the stock market, you do that all the time. You go, yeah, I'm all about Facebook or whatever's making money, and all of a sudden, yeah, I like Nvidia now. You buy the Nvidia. There's no peer pressure, no shame. Just move on, and you're a complete momentum player, and that's encouraged. Anyway, but of all those investments, one of the most useful that I think should be a component of any portfolio is real estate. And I actually sold real estate for a short amount of time. This was back when I would have had 3 full-time jobs if I would have done the real estate agent thing. And real estate, well, anywhere you do it, the notion that real estate, that if anybody wants to get involved in that in a career, that do some investigation and talk to some people involved in it. You may really like it, or you may not. For me, it wasn't for me. The people spend, I've got obviously a PhD, and some of the other people in real estate who were at the top of their game, they just had a high school degree, and so I have other options, and there's a limit that I'm willing to fight and grovel to make money. Some of those other people that are making, a few $100,000 a year, and they don't have any education, they don't have a lot of options. They will fight like a caged animal if it looks like you're getting in between them and their commissions. And it was just not a pleasant sort of group of people I wanted to work around. So in real estate, about 95% of the people, I'd say 98% of the people, sell, 5% of the real estate. In that upper tier, the real movers and shakers, they are selling a lot. And my mentor was one of those people. And, first thing she said was, yeah, you should probably sell your dogs. And horses are right out. Those are a huge time suck. And I'm like, why am I, living this life do I need? No, I don't. So anyway, I jumped out. But anyway, I, had a few transactions, had, got some exposure in the business, and I've always, bought and sold a lot of property. So that's cool. But the purchase process is pretty involved, and so I think it's worth covering, since that's probably going to be a component of your personal finance journey. So searching for a home. First thing you got to do, pre-approval. Okay, you got to get financing. Before you even find an agent, talk to an agent. Or maybe talk to an agent and find out what lender they're going to work with. But this is just a very tentative thing. You don't start looking for homes until you've figured out how much money you have to work with. That top tier of real estate people that you want to have working with you or working, for you, whatever, they're not going to be accessible if you don't have pre-approval. Their time is money, and these people don't have the time to mess around with somebody who's not serious. And if you don't have a pre-approval, then you're portraying a definite lack of seriousness. Because, they could go out there and show you homes, and then, showing you all these $500,000 homes, and then you find out you can only get approved for $400,000, or you can get $600,000. So now you want to look at a whole different class of homes. So they're wasting their time until they know what you've got. So you get pre-approved, and then when you're looking for a home, you're buying the home. It's like anything else. You're buying it to sell it, basically. You're hoping to stay there a while, perhaps. Maybe your intention is to flip it, but you have to have the perspective of how many other people are going to be interested in this home. So you're saying, oh, I don't care, the location, the schools are crummy here, but, I don't have kids, so I'm not worried about it. Well, the next buyer is probably going to have kids. The average buyer might have kids. And so you want to make this thing really attractive. So for me, I like to be on the edges. Everything I've got, I think now is on some sort of waterfront. Up here it's all on rivers, but I like being on the edge, and I like having a big chunk of land. But anyway, if you can be on the edge of a golf course, the edge of a park, the edge of a clearing that's not going to be developed right off, maybe that's something. And then a lot of places you can look. Not to badmouth Wasilla, but I drive through there and it's like, wow, that is a future slum. That does not look, the cheapest homes possible. They look exactly the same. Everything's bright and shiny right now, but you can tell that this is not going to end well in 10 years from now. All right, so you got a good location. Licensee, seller pays the commission. So we call them licensees up here just because there's been a lot of fraud. They don't really like to use the agent term. But anyway, that's beyond the scope of this class. But anyway, in most cases, if not all cases, I would use a real estate agent. You don't have to necessarily buy for them. Depends what kind of contract you sign into, but usually they're not an exclusive contract. But, the price is, that commission is paid by the seller, so they're not costing you money. And if somebody does for sale by owner, the reason they do for sale by owner is probably because they called out a real estate agent, and I did this in a number of cases, where people want way too much for their home. No, my home's worth $500,000. It's like, no, we can only list this for $400,000. Well, no, I can sell it for $500,000. I'll list it myself. And so they listed it at $500,000. So don't always expect that for sale by owner is going to be the cheaper one. A lot of times it's somebody who thinks they're sitting on a whatever, and they're not. Zillow online services, they just haven't matured enough. They're not all that accurate in Alaska. Alaska's a non-disclosure state. Low volume, not that many people. These big companies don't really, the numbers are wildly wrong for the most part. Disclosure review, that's another reason to have an agent. How things, whatever you want to find out. If there's any discrepancies, any, negative information about the property. If an agent's involved, they're going to get sued and they're going to lose if they withhold something. If a owner sells it to you and doesn't tell you some of the problems, the courts are just going to go, he's not, a real estate professional. Who knows? He's not going to be held to the same standard. The licensee is not going to put their license and their money on the line by hiding something for the most part. Homeowners associations, I hate them. Some people, they maybe provide a useful function for them. Not for me. Here's all the things about the transfers. Appraisal. Appraisers, sometimes they work, sometimes they don't. Appraisers, what they look at comp sales, comparative sales. And if it's a very thinly traded market, if you're buying raw land especially, they don't know what it's worth. If you're buying a home in a subdivision where it just had 4 homes selling that subdivision, appraisal is probably pretty accurate. But the whole thing that kind of distorts the system is that the appraiser, you make an offer on a home for like $400,000, the appraiser knows what you offered for that home, and they take that into account when they're making their appraisal. So, the home appraised for $400,000. What a coincidence. Just what I offered. Yeah, not so much. Inspections. Very important to a certain extent. There's some home inspectors, and I as a salesperson knew this, that, these people are very nervous. They're not sure about the transaction. We don't want to call that inspector because he's going to find all these defects and they're going to freak out. No, we want the blind guy, not being all disabled, but anyway, the guy who's not going to find any defects and, not going to look too deep. For me, the inspector I want, anytime I buy a home or a property, I want an engineer, especially if you're buying anything, with the number of earthquakes that have happened and the lack of coverage for the most part. There's a lot of defects in some of these houses that haven't been fixed. It's one thing to have the defect and, ruin the house, but it's another to not even know about it. So you may want to, look at the credentials of the inspector and perhaps hire one. I mean, sometimes there's some good deals. There was a home out in Mirror Lake, if you know where that is, out by Chugiak, I guess that'd be. Anyway, this friggin' house was literally sinking in the water. But it was a screaming deal. And so I hired an engineer to, put in an offer. The offer was, I don't know that we actually, no, we didn't. I think they accepted the offer contingent to an inspection. And the friend of mine at the time, who was the engineer, he came out there and looked and said, yeah, this looks cool, but no, it's going down. There's no way to save this. The septic tank was already ruined. They were having to have the tank, not the septic field had failed. They were having to pump it out every month, $250 a month to get the septic tank. There was no leach field. It was shot. So anyway, know what you're getting in on. Loan approval commitment. Yep. Interest rates, Good thing about what's going on right now, like I said, like people talk about a weaker dollar, recession, this is horrible. If they lower the interest rates, could be a good thing. Could actually stimulate things. Not only can the government refinance, but so can some of these homeowners. But anyway, you're watching that, and then you're getting closer to closing. And then the final walkthrough. Make sure everything's right. So you go through there based upon that inspection. I've gotten, I don't know, one time I took $10,000 in cash. I was supposed to show up at closing with $10,000. Ended up there walking out of there with a check because there were some, defects on the house that I agreed to basically fix myself, and so got the money. One of the things too was some water had flooded out of a tank, and this home was very nice in terms of nice wood floors, and they agreed to fix that, and they're putting in some sort of garbage, composite flooring click together planks. So anyway, I caught that on the final walkthrough and made them fix it. So once you do the closing, you're it's closed. So the other thing that happens before the closing is to get that paperwork days ahead of time. When you go to the closing, they are just shoving papers in front of you, and they're legitimately, it's most not meant to scare you, but it's meant to be full disclosure, but it's too little too late. They shove all these federal forms in front of you, that are mandated, and finally you see, oh my God, I'm paying $400,000 for this home, but by the time all the interest rates are done, I'm paying, $900,000 or whatever it is, a huge amount. Your head's tumbled and you don't know what to do. And well, it's because they extrapolated that out 30 years from now. But anyway, if you have the paperwork a couple days ahead, what you're supposed to by law, then you can sit there with your licensee or a lawyer or the closing agent or whatever, and before the day of the closing, because the day of the closing is the day of the closing. You can't go, I want to think on this overnight. No, that's not the. Forms are printed, things are moving ahead. It's going to be recorded. You will lose the deal if you delay. So get that paperwork beforehand and make the closing just no big deal. You just go in there and sign the paperwork. All right. So I think we're good there. Term project, we talked a bunch about it. I have a couple papers to review this weekend for people who are still taking advantage of the chance to have me kind of review their papers before they go for a final grade. I encourage that for those few who want to do that. For the rest of you, big deal is, tailor the term paper. I think, in fact, I'm overdue on an email about that. Somebody asking me about they wanted to, make their focus their term paper more, tailored, more bespoke to their own individual needs. That's cool. It's if it looks like a paper that's, going to provide some use to you, and you really want to go down some particular rabbit hole for one portion of this, can be a big part of your plan, yeah, spend the effort. You're probably not going to have this time later in life. This is kind of a good time to, in an academic setting where you can not only come up with a plan but also get a good grade, to put a little time in and think about some of these things. Because literally, if you get a job, well, I mean, you're going to get a job, but and you're working for the big corporation type thing. And mention that, it's kind of funny. Booz Allen, the company that I was working for, I talked about, they used to be prestigious and not so much. They are getting some bad press lately. But anyway, the Booz Allen thing, you walk in there, or even when I went to work full time for UA, they're just shoving stuff in front of you going, okay, what health plan do you want? And what other plan do you want? And for your investments, what are you going to do here? And they're, and you as a new employee, you don't want to ask stupid questions, and you don't want to, be that guy, whatever. If you know the terms and you have a plan, you're in a better position to make better decisions. Because a lot of those plans, in terms of some of your, benefit choices early, within the first, you make those choices within like maybe the first week, and then after a month or so, they become irrevocable for your career. Oh, you're on that retirement plan. And you find your coworker, oh, why'd you do that? We all did this other one because it's a much better deal. But you're locked into it because you made a decision, perhaps, and you had a lot of other stuff going on at that time. Okay, next one. Yep, final exam prep, mid part of next week. That'll be back. We'll post that up, get the exam posted. You're going to do the exam online, and you're all going to succeed. So good luck to you. Sorry about the pops, some of the extraneous noises, but I think we got her done. And we'll talk to you later.